This program is brought to you by realestate.com.au. Keep moving with Australia's #1 address in property.
It's great to have your company here on Business Now. Let's take you around the auction markets over the weekend. And look, to be honest, it was pretty busy out there. Across Australia, including regional areas, there were just under 1,600 auctions, with a little over 61% of those successful. In Sydney, 563 auctions. Pretty quiet in Sydney at the moment. 57% of those were sold. Melbourne, that was healthier. It had 607 auctions and just under 70% were successful. In Brisbane, just 56 auctions, but it's healthy too. Just under 70% there cleared. Adelaide has just come off the boil a bit. 59 auctions, 64% sold. Canberra had 40 auctions and 62.5% of those were successful. So let's bring in here Eleanor Creagh, Senior Economist with REA Group. Eleanor, welcome. The election has passed. Interest rates are coming down. Is there solid home price growth ahead, you would imagine?
Yeah, look, that's exactly right. So the election out the way, and really we're seeing renewed activity in auction markets in terms of auction volumes, but also clearance rates strengthening a little bit as well. Really that path ahead being clear for buyers and sellers to re-engage after any uncertainty the election might have brought in the weeks prior. Of course, I think also people looking ahead to the prospect of further interest rate cuts. We're likely going to get that another 25 basis point rate cut coming in May. So certainly I think those potential home buyers really looking ahead to interest rates moving lower, borrowing capacities continuing to increase, and home buying demand continuing to remain relatively robust with the potential of continued home price growth supported by those rate cuts incoming.
OK, so we know that the Labor Party has tried to stimulate demand, essentially by allowing first home buyers to have just a 5% deposit. It'll then guarantee the lender. So it's pushing the demand side. The other side of the equation is the supply side. Is there any sign yet that there are going to be more homes built with that government target of having 1.2 million new homes built between now and 2030?
Yeah, look, I think that's the really critical question, isn't it? So we know that we've got the demand side of the housing market. Certainly, as you say, we've got those incentives or support for first home buyers likely to bolster demand. And really, we know that that's facing into what continues to be a chronic supply shortage. We know that we do have that housing accord target of 1.2 million homes over 5 years, but we're really tracking quite a long way from that at the moment. So building approvals data released last week shows that we've seen around 180,000 homes approved over the past 12 months. That's quite a ways from the 240,000 we'd need in order to hit the target. But encouragingly, we are seeing that approvals are trending higher. So although there was a slight month-on-month decline over the past year, approvals are around 13% higher, and it is that higher density dwelling segment, so apartment approvals, that are really continuing to support that rise. And with interest rates continuing to move lower this year and housing market demand remaining pretty robust and prices continuing to lift, we should see that approvals do continue to track in the right direction. Although certainly we do need more on the supply front in terms of hitting those targets and really, addressing that chronic supply shortage that we know we have.
OK, so just quickly on that side of it, I mean, that's about the profit incentive for a developer. You're not going to go ahead with a development unless you think there's a profit at the other end. And that's the decision now that those developers have to make.
Yeah, that's exactly right. And we've seen that, profits or internal rates of returns, which are what developers often assess project feasibility on, haven't really stacked up over the past few years, really. So we've seen that those significant construction materials price rises have really dented. We've also seen labour cost increases.
Eleanor, I'm going to jump in there. I've just run out of time. I apologise. Many thanks for your time today.